Well, we're at the end of another trading day, and it's time for the daily market summary. And it was WASDE day to end the week. We're being joined by Ethan Robson of agmarket.net. Ethan, we look at the WASDE just coming out of those June reports. Were there any surprises in the report today?
Yeah, all in all, a good market day for the grains agriculture complex. September corn's up about 7, 438.5. December corn's up 8, 460 1/4. Soybean sector, good price action there. All things considered, August soybeans up 12 3/4, 11.91 3/4. November soybeans up 8, 11.90 3/4. Wheat market sharply higher from the get go. September Chicago wheat's up 19.5. USDA report out, like you said. USDA put wheat production for the U.S. lowest since 1970. So an interesting fact there.
And now soybeans and corn have been under pressure the last day or so, and they started the day off that way too. I mean, what was in that report that got them to turn around, or did wheat just take them along for the ride?
Yeah, we took corn along for the ride for a little bit, but then also too was able to cut down carry out for new crop corn ending stocks better than trade expected there. Had ending stocks down to 1.79 for new crop corn. That's going to put some pressure on the U.S. farmer to produce a good trendline crop, 183 or above. If we have some sort of hiccups in that U.S. corn national yield, that's going to tighten down our supply balance sheet pretty tight, and things could get interesting if that were to come true.
Well, and of course, we're into that time frame now where weather is going to become also important, because with corn now, tasseling and getting ready to start pollinating, and then not far beyond that, then beans are going to be ready to go. And it's really, these next 6 weeks are kind of nail biters, aren't they?
They are, yeah. Pay attention to the weather forecast we've seen this week and the past week, too. Trade's paying close attention to the weather forecast. Pick out your favorite meteorologist. Pay close attention to them, because that's what the managed money hedge funds up in Chicago and desk are going to be paying close attention to, because that can change the U.S. supply and demand's balance sheets really quickly.
Now, over on the livestock side of things, cattle, even though they've been so high, these last couple months and years, they've been having kind of a downtrend these last couple of days. And, they were triple digits down again this morning. I mean, how did they pan out for the day? Let's start with cattle.
Yeah, rough day in that cattle complex. Live cattle August down about 5 cents, 235.20. That feeder cattle August contract down $1.55. 354.60. Think it's 9 out of the last 11 days have been down in the red for the feeder cattle, that August contract. Managed money just continue to feel comfortable shorting this since the 375, 377 area, finding some pretty good resistance there on that August contract on the technicals. Managed money just continue to following the trend.
When we talk about cattle, like I said, it's been so high for so long that a couple of days of losses here and there usually haven't been anything to worry about. But are we seeing any kind of a trend established, or is just kind of the time of year we're in?
It's a combination of both, kind of a weaker seasonal time. Seeing that with cash markets too. Cash markets a little bit weaker, but just urge the farmer, producer, rancher just the importance of proper risk management. Markets can go one way farther than you can think and go the opposite just as equally. So it's important to have proper risk management choices, risk management decisions. There's plenty of opportunities out there to try to protect the bottom line.
And then on the hogs, we've been seeing them kind of quietly move in some positive direction. Did they continue that today?
Yeah, kind of a spread action there. Lean hogs August contract up 85 cents, 99 even. Deferred's a weaker tone today, but all in all, a good week for the lean hogs. Been a weaker tone coming into this week, but able to turn around for the most part. Still positive gains week over week.
Do you think we're starting to see any kind of trend with the consumer starting to pay more attention to pork with its lower prices at the meat counter?
Definitely is. Yeah, we're seeing that with price action, high beef costs, and then too with fuel coming down a little bit, but not as much as what prices should suggest. That we're seeing consumers, the U.S. consumers, switch over to pork prices and finding some support there.
All right, Ethan. Well, if folks want to look at some of the intel you guys have, especially recapping this WASDE report, and maybe get some insight on how to do some protection type things with the markets here, what's the best way for them to get that conversation started?
Yeah, visit us online, agmarket.net. Give us a call here in Bloomington Normal, 1-800-779-1515.
Ethan Robson's been with us from agmarket.net. Ethan, have a great weekend. We'll talk to you again soon.
You as well, guys. Thank you.